All right, so there's a lot of information that I'm going to go over. Some new developments came out just this past weekend, as new developments seem to be coming out just about every week. But the application came out late Friday, so there's a lot more information that has come up since before. And thank you for fixing that echoing. All right, so kind of this disclaimer on this is, sometimes, the information is subject to change. Well, in this case, I'm sure things may still continue to change. It's, well, as we'll talk about it here. Oh, there we go. So first off, the funds that you received from the PPP, there are a few considerations that you have to make if you've received the funds. Are your employees already working? Maybe they have a reduced hours and you can use these funds to bring up the hours back to full-time work. If you are closed or possibly still closed, your option is rehire your employees. And a piece that many businesses are struggling with is, I don't have any work for my employees. So if I bring them back, what are they exactly doing? Which could be nothing. And under that scenario, if you are hiring them back just to use these funds and you have no work, the consideration is, all right, what happens in 8 weeks after these funds are gone and you still may not have work for them? So do you lay them off a second time around, which you are going to have unhappy employees getting laid off for a second time and having to go back through that unemployment wheel at the state. And I think the third option is, you've received the funds, you don't have the work for your employees, then you just hold on to the funds and maybe you're considering using it for some other purposes. I'm going to point out 2 certifications that were made when you took the loan. One saying that you're using this to support your ongoing operation. And then the other piece, which is I think a huge piece, is that you're saying you are using the funds to retain workers and maintain your payroll. And then if you use for anything other than that, then you are fraud. There are many businesses out there that I've spoken to, and some that are in the national news, that have received the funds. Some have returned the funds. And I know many that are still not using it. They just don't know what to do because of that. The SBA had put out, they extended this deadline twice already. I don't believe they're extending it a third time because now the date has passed. They said if you have the funds and you really don't think you deserve them or need them or going to use them properly, you could give them back by May 18th. So since we are past that date, it's really important that you have the funds and you use them for the loan's intended purposes. I've seen a couple of arrests already in regards to people that were obtained the funds fraudulently or have used the funds fraudulently already. So to seek forgiveness on this, and I will be going over a lot of information. If you have questions, you can throw it in the chat. So I'll try to look at that every now and then and see if I can pull in some of the questions and answers. The forgiveness process is really a delicate balancing act of 5 different pieces. It's all balanced on timing, and then you have payroll costs, non-payroll, and then on the payroll side, you have 2 more things that you have to balance, and we'll talk about each of these. So time is the first piece, and you have 8 weeks to spend the funds. The countdown begins on the day the funds hit your bank account, and you have 55 days after. or 56 days if you count the day it hits your bank account. It is a strict 8 weeks. So if you spend money, you know, after it, it's possible it doesn't count. The loan application, the forgiveness, came up with a new definition, and they call it an alternative payroll period. So you have your 8 weeks if you spend the funds, but now they came in and said, well, if you want, you can look at complete pay periods for your payroll costs. So I put this up in a visual here that, you know, many of you will get your deposit in the middle of a pay period. So I identified here, I got my deposit on May 7th. And the first payday after May 7th on a biweekly payroll is May 15th. So if I use the traditional 8 weeks, I would count that payday. And then again, 55 days after the date of deposit is the last payday you can have. The alternative method is I get my deposit and I wait until the first day of my pay period. And my pay period runs Monday through Sunday bi-weekly. So I can wait until the 11th of May, run through that entire pay period through the 24th, and then count the first day, my pay period of the 29th. So the alternative kind of lets me skip a payday, get caught up, know who I'm hiring back, and possibly run a complete pay period and use the funds. Of course, this is coming, you know, late, you know, where many of us are halfway through the process. So you can't do any planning, you know, going backwards. So you may just want to see which payroll works better for you. If maybe that first payroll was not enough spending, and maybe you wish you had another payroll to get ramped up and you did, well, now you can use that one. And if you're bi-weekly, you're going to count 4 pay periods out from that. So your last payday is going to be outside of that 8-week window, which is perfectly fine. Now you have the other piece that you can spend the funds on, which are the non-payroll costs, and we'll go over each one of these. And they made a little clarification here about how you can spend your non-payroll costs. They do hold us to that 8-week period. You can't spend your funds on non-payroll costs in that alternative payroll period. But what they are allowing is bills that you receive for the period of time within the 8 weeks, you can pay the bill outside of the 8 weeks when that bill is due. So for example, if your 8 weeks is through the month of June, you get your electric bill for the month of June, and you pay your electric bill and it's due July 10th. Paying that bill on July 10th would count towards forgiveness, even though your 8 weeks was up in the month of June. It also appears that you can pay your back rent, your back utilities. So I know businesses that were closed that didn't have the funds to pay their rent for the month of April or even the month of May. Now that you get the funds, you can pay all of that back rent, and that counts towards forgiveness. So it's not, it was originally stated, and I didn't believe how it was stated, and some people were taking it too literally, that they used the word incurred and paid, and it would be virtually impossible to incur and pay costs in a 2-month period and spend all the funds as needed. So it seems like it's an incurred or paid on that spending. All right, so the next piece after time is what you can spend it on. And there hasn't been too much change here. It's non-payroll costs and payroll costs. Your non-payroll costs are specifically these items, and the existence of that service or that lease needed to have been in place by February 15th of 2020. So it is your rent, your interest. I researched for someone who has a limousine business and they have car payments and interest. It does cover the auto loan interest payment, just the interest part of it. Your utilities, your gas, electric, transportation utility, phone, internet. Looking at the application, they are going to require, when you seek forgiveness, to provide a bill from February, as well as the bills for the month that you're seeking forgiveness. And that is so that they can see that that service was in place prior to February 15th. On the payroll cost side, much of this I think is straightforward. It is your gross wages, and pretty much any type of wage you can come up with, including bonuses, severance pay, pretty much anything that's a taxable wage. What's not included, well, we'll go over that in a moment. Also in payroll costs are your share of health insurance, your share into the employee's retirement plan. So if you have a 401k, your contribution, and your cost of state unemployment tax. There's no other payroll taxes that are included other than state unemployment for here in Florida. What is not included in payroll costs is compensation to any one individual greater than $100,000 annualized. That amounts to $15,385. So you can certainly pay someone more than that. Just when you get to the forgiveness, you're capped at that being the forgiven part. If you are self-employed, so if you file a Schedule C, you don't get to include your cost of healthcare expenses, retirement contributions, unemployment tax. But for regular businesses, those are included for owners. I don't know if the next one applies to anyone, but if you have employees whose residence is outside of the U.S., there's the Families First Coronavirus Response Act, that federal sick leave and family medical leave. That is a wage you pay, but you're getting reimbursed with that from a tax credit. So that is not included in forgivable because it's not your expense to begin with. You're getting reimbursed for that. And the same goes for other reimbursements and independent contractor payments. Those are not employees. All right, this is a new one and important, and this came up that we know that there's that $15,385 limit for employees, but if you are an owner, you are also limited to the lesser of how much you paid yourself in 2019. So I believe what they're doing here is preventing the owner from giving themselves money that would have otherwise gone to your employees and saying, hey, I got to spend this on payroll. I'm going to pay myself. Now, if you were an owner who paid yourself maybe $50,000 last year because it was a slow year or you didn't have a lot of wages, or maybe you're ramping up, you are stuck with that compensation, even though this year you may have already given yourself a raise or an increase. So this is new. Again, I'm not sure if we may see some further definition of this where, you know, if your business wasn't open for entire 2019. Maybe there's some sort of adjustment, but right now this is the language used, that as an owner, you're limiting yourself to the lesser of those two items. Correct, employer. Yeah. So now how you use the funds, there is a balance as to how you spend the funds. It's no more than 25% on non-payroll costs and at least 75% on payroll costs. Anything more than 25% of the amount you spend on payroll, on non-payroll costs, is not forgiven. So the way I look at it is your rent and utilities, I see those as being fixed items. You can't really spend more unless you're paying some, well, I was gonna say if you're paying some back rent and utilities, but you know what that is. So I say if you forecast those fixed costs and you say, okay, I'm only gonna spend 20% on these non-payroll costs. Well, then you have another 5% that you can spend on the payroll side. So if you plan that, you can spend it out in payroll and bring up payroll to at least 75%, if not more, in order to use the full loan. All right. Self-employed. Yeah, so I've seen a question out there about giving health insurance premium holiday, no employee premium. I have not heard of that. I know you can bonus your employees. You can give them more money to help them. There's nothing wrong with hazard pay, bonus pay to spend your payroll funds. I don't see there's anything wrong with it, though. It does say in the rules that it's your cost, the employer's cost of health insurance. So if it's not deducted from the employee, it's your cost. So if you do that for the month or 2 months, that would appear not to violate any rules. And yes, you can pay your employees additional compensation. All right, so the next piece on the payroll side of this balancing equation here is restoring your employees back to what I call pre-COVID-19 levels. And they give you 2 look-back periods. February 15th to June 30th of 2019. And they say if you're seasonal, you should use that look-back period. Otherwise, you use the first 2 months of this year. I've seen some articles where you say you use the greater of. I don't see that in the application. I say use the lesser of, because then you're setting a lower hurdle for yourself to meet your full-time equivalent count. The application has provided us with instructions on how to count. This was a big mystery a week ago. Nobody knew how to count a full-time equivalent employee in the eyes of the SBA and this PPP forgiveness. Here, they give us the method, which is actually the method that I would have suggested. You take your total hours worked in a period of time. So if it's a weekly payroll, you take 40 hours as your divisor. If you're biweekly, you take 80. So you take the total hours, and I say to exclude overtime from that, because an employee cannot count for more than one. So if somebody works 50 hours a week, they count as one. They don't count as 1 1/4. So if you eliminate the overtime, take the hours, divide by 40 if you're weekly, 80, and you come up with a number. If you're salaried or have salaried employees, you just count that as one. You don't necessarily have hours on a salaried person. And So here, whoops, here my example. I have 13 employees who worked 842 hours, excluding overtime. I take 842 divided by 80, because I'm biweekly payroll. I come up with 10.53. The 10.53 or 10.5 plus 2 salaried employees is 12.5 employees. So when you're doing it on this look back period for January and February, I say to take each pay period. So you count, maybe you had 4 biweekly pay periods in those 2 months. You do each pay period on its own. You have 4 numbers, you add it, divide it by 4, and you come up with your full-time equivalent. The SBA has now given us an alternative method, or what they call the simplified method, for counting your employees. You get completely different results depending on which method you use. So we're going to go through the same example here. And they say you take an employee who works 40 hours or more, they count 1. If that employee works less than 40 hours, you give them a count of a half. And after you rate each one of your employees, you add up the numbers. So in my exact same example, 13 employees, I'm saying they work 35 hours on average. With my saying 2 salaried employees, so I have 13 times a half. Even though they work pretty close to full time, they're not 40 hours, so they count as a half. So that's 6.5 plus my 2 salaried. So you can see I get a very different number, 8.5, using the exact same employees, exact same type of work, hours of work, than this previous example. So it's important, whatever method you use to count your look back period, you use the same method to count your covered period employees. So there is a question out there which we're going to cover very shortly. So this was an interesting article that I saw, and I get questions from clients on almost a daily basis of, my employees are making more on overtime, I'm sorry, on unemployment. Why would they want to come back to work? In this case, this spa owner had over 100 employees, and as you can see, some of the comments I pointed out here was a firestorm of hatred. The employees revolted against her, and she said it's just going to be so much bad will towards her company from these employees because they were making $800–900 a week on unemployment, and now she's has to bring them back, and she was only paying them a few $100s because they were part-time. So bringing back your employees may be a challenge. This came out about 2 weeks ago, which is very helpful in that challenge of getting your employees back. And that is, you make your employee or separated employee a written offer. Send them an email, that's a written offer. I would also throw a letter in the mail. If that employee rejects your offer and says, nope, I am making more on unemployment, I do not want to come back, you document that offer or that rejection. It does not have to be in writing, but if you send them an email and they reply, well, you've got it in writing. If you send them a letter or call them, well, calling wouldn't be good because that's not an in-writing offer, but if they call you to reject, document the date and time. If they call you on your cell phone, take a screenshot of your caller ID list to show that that was an incoming call. Because that rejected offer, they will not count. You throw them out of your count as having to be replaced. So now if you had 10 and this one person doesn't want to come back, well, now you only have to replace the 9. What just came out recently, this last weekend, is now you must inform the state unemployment office of these employees who reject your offer within 30 days. SBA is supposedly going to put more information as to how this process may play out. So hopefully we'll see some guidance on this soon, because I know there's many companies that are getting close to that 30 days of an employee rejecting the offer. So what they're going to do is they're going to come back around and they'll go to that employee and say, hey, on May 6th, you rejected that offer. We're going to collect all of that unemployment we paid to you since May 6th because you're now not eligible. You received an offer that you refused. Also, what's new is there's a couple of more reasons where you can exclude an employee. If you terminated them for cause, whatever that cause is, I'm not going to go into those reasons, but you can look through your Department of Unemployment guide, and they tell about cause and not cause. Also, voluntary resignation. If the employee resigned, they also are excluded from your count. And of course, an employee who may have passed away, you do not have to replace that person. So one of the questions that was out there in the chat is if you do not restore, yes, there is a partial forgiveness. So if you had 10 employees, just simply put 10 that you have to replace, and you only replace 9, then that is a 10% reduction of your staff. 10% of the total loan is not forgiven. So not only the payroll portion, but also that overhead portion. So off the top, 10% is not forgiven. So you want to bring back your employees. The other big piece of ball that you're balancing on here is a reduction in wage and salary. And I say this kind of goes along with that limitation where you can't give an owner more money than they received in 2019. Reduction in wage salary is not a reduction based on hours. And I put sort of because if you reduce their hours, well, then you're violating that previous FTE reduction in their pay or their salary. So if I have a salaried employee, just real simple, they make, I'll give it in my next example here. Maybe I'm the owner and I want to give myself a little extra money, so I'm going to lower my employee's salary to bump mine up, or maybe bump up another employee. So I only pay that person $8,000 during that 8-week period. Well, annualized, that's $52,000. And comparing 52,000 annualized to 80,000 annualized, that is a 35% reduction in that person's pay. You are only allowed to reduce a person's pay by 25%. So I went over by 10%. We go back to that $80,000 of what they were being paid. 10% of that is $8,000. We're dealing with annualized numbers, so we bring that back down to an 8-week number. And so again, it's not a reduction based on lowering their hours because that is on the FTE count. This is a reduction in their pay. So funds, reducing a person's pay is fine. Just be careful with minimum wage. And Bruce would tell you there may be some other things, you know, you have to give them advance note. That is in your abilities to reduce someone's pay. Now, on both of these sports terms here, and I don't know if you, in basketball, it's the buzzer beater. You throw up that ball, and when the clock runs out, and you know, get that last minute. The SBA gives you two of these, and say if you bring back force, whether by number or wages, by June 30th, then they will ignore the fact that you did not bring back the numbers or we may see an extension on the June 30th date for those that are getting the loan later, but I have not heard any chatter on that topic. All right, couple of bonus pieces here. Pay by check. Don't use a credit card that may be seen as not paying within the 8-week period. Documentation is very important. Application for forgiveness. One of those entire pages is about documentation. 2/3 of the page are documents that you have to turn in with loan forgiveness process. Copies of canceled checks, invoices, agreements, as I said, the bill from back in February to show that the service was in place in February, tax returns, payroll registers. They're providing worksheets. So a lot of documentation. So whatever you have of them out of many of you are taking the funds in and putting them in too much out of it, or possibly not enough. All right. So I see a question. So if your biweekly pay period happens to fall, so there are 5 payrolls paid in the 8 weeks, do the 5 payrolls count? So going back to that calendar, the alternative, if you use the alternative period, it pretty much says you're using your pay period is mirroring the loan period. So if you're biweekly, we're going to start the 8 weeks on the beginning of a pay period, which means you should only have 4 payrolls. If you don't do the adjusted method, that alternative method, I'd say maybe you can sneak in 5 payrolls, because let's say I get funded on a Thursday and Friday happens to be a payday. You know, I've got that in there. You're then going to have possibly 9 weeks of payroll, or maybe 10, maybe 5 biweekly payrolls in there. At the end of the process, you may have to move your check date backwards in order to fit another payroll in there. I have talked to companies that what they are doing is they are paying their employees early, so to speak. So on that last payroll, paying the employee wages for the next pay period out. The only time I see the word prepayment not being available is in the case of interest. I don't really see prepayment in there being a problem with rent, but again, it's something I would be careful with. I wouldn't just, if you throw it in there, be prepared that it may come back and say it's not a forgiven amount. All right, so the forgiveness process is going to be through your issuing lender. As I said, documentation is important. So there's an entire page of the application talks about documents you have to provide. There's certifications that you need to make. And after you turn in this application, you have 60 days, or I should say the bank has 60 days to issue a decision. If your loan is less than $2 million, you can breathe a little bit easier. The SBA and Treasury are not going to be investigating. It's between you and the bank. It is possible there's a random audit. Maybe you do get seeked out for further review. And here's a new one. There's a 6-year retention period on your documents. So, and that's 6 years from the date of forgiveness. So on the date you're forgiven, I would take all these documents, put it in a box, label the box, destroy. 6 years in 1 day. It's hard enough for me to remember what I did last month, much than 6 years ago. So, so again, documentation is important. Copies of everything, and now you have to hold on to it for a long time. So this came out a couple of weeks ago. So in the CARES Act, it says that normally when you have debt that's forgiven, it's taxable. Back in the mortgage days when your mortgage was forgiven, you got a 1099 for forgiven debt, and it's income. Well, the CARES Act says this forgiven debt will not be taxable income. Great, celebrate a little bit. And then April 30th, the IRS came out and they said, well, wait a minute. Yeah, we're not going to forgive the debt. But you remember all those expenses you paid with that debt? You paid for rent and payroll? Well, you can't use that as a deduction. So we're going to get you on the other side. So it kind of does become taxable now to you. I have seen a lot of talk, in Washington, they're saying, wait a minute, this is not what we had in mind. We said this is not taxable income, not just not taxable on the front end, but don't stick them to it on the back end. And not taking this deduction is now going to create taxable income. So we're yet to see what could happen with this. Just be prepared if it sticks, that you cannot take these expenses as a deduction off of your taxable income for 2020. So I have seen other cases where agencies have come out with an opinion, and then Washington has come in and made that agency change their opinion. We've seen it with Department of Labor and some of the other CARES and Families First Act. All right, so if your amount is not forgiven, then that turns into a 2-year loan, 1% interest. I believe the SBA says no greater than 4%, but it appears the banks are at 1%. No loan fees, no prepayment. Your first payment is in 7 months. So it's not bad terms. I just get a little conflicted that they say you must spend these costs on payroll and on these specific non-payroll items, but then they say, okay, if you don't spend it in the 8 weeks, it turns into non-forgiven. So does that mean you can spend it on whatever you want, or do you still have to spend the non-forgiven portion on payroll and non-payroll costs? So I think that's a little unclear, but that's where you're doing the non-forgiven portion at this moment. All right, there was a question on utility costs and transportation. I'm going to share my presentation here. And this is a hyperlink, transportation utility fees. If you don't know what that means, I would say it doesn't apply to you. It has a very specific meaning, and I think if you're in that industry and you know what it means, you go, okay, yeah, I'm going to use that. It does not mean your FedEx bill or any other transportation costs. It is a very specific item. Someone asked, has the application changed? It came out late last Friday. It has not been changed as of yet. It certainly can change. When I share my presentation, I do have a link to that, the website, where they'll post any changes out there. It is 11 pages. There's a lot of text to it. It appears there's only 2 pages needs to be turned in. A complete page of all these certifications that you're making of how you use the funds and that you were truthful. And then the other page where you're going to perform a lot of these calculations. So let's see, some other questions. Rent for storage. Yeah, that is an interesting one. What they're, if we look at the intent of this, which is how I try to look at it and come up with my definitions. And when people try to read the exact act word for word, a lot of times the writers of the law missed putting their thought in writing and coming up with the intent. So the intent of those non-payroll costs is to give your employees a place to work so you can spend your payroll costs, your rent and keeping the lights on and putting that overhead out there. Because if they just gave you payroll, you can say, well, I have no place for the employee to work. In that regards, I would say storage, probably not. I mean, you can try putting it in there, but I'm going to say not storage, because unless your employees work in the storage facility, I think that misses the intent. So, well, that is the end of my formal slides here. I'm looking back through the questions to see if there's any. I don't know if you want to come off of mute if I missed any in the chat here. Let's see. The economic injury was applied for and received after PPP. So if was applied for and received after. So if it was applied for and received after, if you did it before, it got bundled up into your PPP loan. If it came out after, there are lines on the application where you're accounting for it, and applied before, received after. Yeah, that I am not sure. I know on the loan application, or the forgiveness application, I should say, try to pull up a copy here. They are accounting for receiving that back. So it does not say on the application whether you got it before or after. Yeah, Melissa, I will try to get a more definitive answer for you on that question. But it does look like it is getting sort of paid back or accounted for on the loan forgiveness application. Yeah, so additional compensation is okay, bonuses. There's nothing wrong with paying an employee more money, just not owners. And again, not paying anyone more than $15,385. So raised question is health insurance for business owners. So it appears it depends how your business is structured. If you are a corporation, it appears yes. If you are a sole proprietor, then that does not appear to be the case. And the reason is and I have it here listed. Okay, so there's no forgiveness provided for retirement or health insurance contributions made for self-employed individuals, independent contractors, or sole proprietors, or general partners, because the expenses are paid out of their out of their net self-employment income, and net self-employment income is determined after the reduction for contributions made towards employee retirement health insurance on your Schedule C. So for in that case, the health is not included. What do you say? What do sole proprietors do? They don't pay themselves with a traditional payroll. So all of my research has been for businesses with payroll. I don't spend a whole lot of my time on a sole proprietor and non-traditional payroll. So if you're taking draws, I do believe that what you're forgiven on is your net profit, your net income. So your gross minus your expenses, your net, and I believe that's what they looked at as coming up with how much that you're given. That is somewhat your pay. So they looked back at 2019, divided it by 12. That's your average month, and they gave you 2.5 times that. So I would imagine the forgiveness process is based on the same. That you're taking your gross minus your expenses, and coming up with your net. I think there is still some uncertainty or unclarity out there regarding sole proprietors, but again, most of my time is spent on in the business world and payroll. So there's 2 websites. I don't know if everyone receives the newsletter that I send out. Lately, it's been going out every week. It's normally just once a month. But on my website, paymaster.com/COVID-19 or blog.paymaster.com, I've been writing content on a couple of times a week and updating my content and putting out information. So if you use that as a source, and I've heard from many execs members who are more than welcome to give me a call, whether you're a client or not, and I'll be happy to guide you and answer questions. there's some.
Bill Price has his hand up.
No, I was just clapping. That was a reaction.
Excellent. We're all clapping, Romeo. Thank you very much.
You're welcome.
Mr. President, oh, let me unmute you. John's trying to talk to us. John, we didn't hear you. John, can you start over?
Yeah, I was just going to say, if there's no more questions, I just have 3 brief announcements. One, I want everybody to keep their prayers going for Hank. Hank's in recovery right now at home. He had a pretty serious operation last week, Hank Polidori. And think and pray, please, for Bob Goldfarb today. He's going to be in surgery for a pretty serious blood clot. Palm Beach Gardens. So keep those 2 things in mind. That would be great. Also, I wanted to let you guys know the results of our vote that we took last Tuesday. So 72% of 72 people who voted for option. Anybody got any guesses? We got some 2 voters out there. You're right. Option 2 is we're staying at Bear Lakes. We're going to eat a different breakfast, which is fine, but we're going to be there. The majority of the people want to stay there. A surprising amount of people voted for option 1 to stay there with the increased dues, which was pretty cool, I thought. So we're not going to have any dues increase. And we're going to stay at Bear Lakes whenever they're going to let us back in. And we're going to eat an okay breakfast and be happy with it and all get more members. I have a closing quote. Will Rogers said this in 1932. Everything is changing. People are talking. Oh, people are taking their comedians seriously and their politicians as a joke, when it used to be vice versa. How true that is, right? You can unmute yourselves and laugh out loud.
I love it. Thank you.
Allison, do we know when we're going back to Bear Lakes? Has anyone said anything?
You know, we've got communication into Marius, the general manager, about what's happening at their end. Hope to hear something today, even if it's not what we want to hear. Hopefully, we'd love some information, and we'll keep you posted.
Romeo's got room behind him there at the Rise of the Resistance room, so we can always meet there with the stormtroopers.
That's the SBA back there.
Don't say that.
Hey, Allison, is there another meeting after this? Sorry, it's Carmine.
Thank you for asking, Carmine. Yes, membership committee. We did send a separate link. If everyone wants to refill their coffee, take a little break. Call in again in about 5 minutes.
Okay.
Good luck at membership. You know what you have to do.
All right.
Thank you again, Romeo. Thank you,
All
everyone.
right. You're welcome. All right. Bye-bye.
Bye.